Bank statement mortgage for self-employed borrowers coming up. Hey guys, I'm Adam Lesner. This is the Portfolio Loan Mortgage Guide, where it's my job to dissect some of the most interesting mortgage challenges and give you the tools that you need to accomplish your homeownership goals, hopes, and dreams. Whether you're a first-time home buyer or a seasoned real estate professional, I guarantee you'll get some good nuggets out of every episode. Today we're talking about bank statement mortgage for self-employed borrowers and 1099 employees, private contractors. So what is a bank statement mortgage? Basically, a bank statement loan is the type of mortgage that you would get if you're self-employed, private contractor, 1099 employee type of situation, and the way that you show your income on your tax returns puts you in a position to where on paper you don't really show much because of the tax write-ups that you take advantage of. So you don't qualify for the mortgage that you're looking to get, or you can't buy the house that you're looking to get because of that. It's really the only time that it's going to bite you in the butt is when you're looking to get a mortgage. So with a bank statement loan, your income, instead of the lender looking at your tax returns to qualify you to calculate your income, the lender's actually going to look at your bank statements usually over a 12 or a 24-month period if needed. So I'm going to go into that into detail today and kind of let you know exactly what you can expect when getting a bank statement mortgage. First one, a personal bank statement mortgage. So this is where you're using your personal bank statements to qualify for the loan. So the lender's going to get like 12 months of your bank statements, going to look at the deposits, see which ones look like they're business related. Now, what do I mean by business related? So if you have a random $10,000 deposit, but most of your deposits, are $2,000 here, $1,500 here, $5,000 there. If you have something that isn't normal, the lender's going to want to see a paper trail. Usually when you're using a bank statement, a personal bank statement loan, the lender's going to want to see your business bank statements for 3 months just to see that the deposits that you're getting are actually coming from a business account. If it's not coming from a business account, a lot of times it creates a little bit of an issue because now it's not quite clear what deposits can be used and what can't be used. So typically, if you're using a personal bank statement loan, then you want to make sure that the business bank statement lines up accordingly. Now, if it doesn't, if the personal bank statement is the actual statement that you use for all business activity, then it's possible that the lender's going to only use they're not going to use all the deposits if you're actually using your personal bank statement as your business account, right? So because the reason for that is obviously there's expenses in the business. So there has to be some sort of expense factor. Typically, if you're using a personal bank statement and it's actually being counted as a business bank statement, they're going to take whatever the deposits are minus 50% of the deposits. So if you have $200,000 in deposits over the last 12 months, simple factor, 50%, cut out half, and your usable income would be $100,000. Next one is the business bank statement loan. Now, if you're getting approved based off of business bank statements, you do need to be 100% owner of the business. If you're using personal bank statements, you don't have to be 100% owner, just so you know. But if you're using business bank statements to qualify, same thing. Getting 12 or 24 months bank statements, lender's going to look at what the average is over 12 months, subtracted by 50% if you don't have a better expense factor from a CPA. Typically, it's going to be 50%. Otherwise, you can go down to 30% expense factor if that's what your CPA says, and they can confirm how long you've been in business and how long they've been doing your tax returns and that type of thing. So a business bank statement loan is a great option to go so that you don't have to deal with getting paper trails of where deposits came from, because the assumption is all deposits that are coming in that are within reason are business related. If there are months where the deposits are spotty, or it just doesn't make sense. You have 1 month you have 100,000 in deposits, the rest of the months you have 5,000 in deposits. Obviously, there's going to be a red flag. So just like any other mortgage, the lender is looking for stability and consistency, because the most important thing when you're trying to get a mortgage is being able to demonstrate that you have the ability to repay the loan. That's what the name of the game. Talking about interest rates when you're looking at a bank statement loan. Obviously, this type of loan is an outside-the-box loan. This isn't your standard conventional vanilla type of loan. So you can expect that since the lender is taking more of a risk than they are in a conventional loan, pricing might be a little bit higher, cost might be a little bit higher. In some cases, it's very comparable to what conventional pricing is, but just give you a heads up, profit and loss only mortgage. So this is where if you have a profit and loss statement from a CPA, lender's going to look at that and also ask for proof, that the CPA has been doing your taxes and how long you've been in business and that type of thing. But for well-qualified buyers, if you have a large down payment and good credit and everything like that, you may be able to get approved just based on a profit and loss. The other one is that if you have a profit and loss that you prepared, if the income matches up with 2 months of your bank statements, then that may be used or may be considered instead of having to provide a full 12-month history. So that does help minimize paperwork in some cases, but it just depends on what your scenario is. Those two options are really for well-qualified buyers with a large down payment and good credit. But basic qualifications for any bank statement loan, you want to have at least 600 credit score. You're going to need at least 10% down. With 10% down, the credit score needs to be better. I think it's like 680 you're going to need. But I at least wanted to cover that stuff because there's so many business owners out there that think that they can't upgrade to their next house or that they have to stay renting because of the way their income shows on their tax returns. So for a lot of business owners and private contractors, it's a breath of fresh air, and we've been able to help folks all around the country accomplish their goals with this, and we're very grateful for every opportunity. So whatever questions you have, don't hesitate to shoot me an inquiry. You can comment below. I'll include some links in the description as well, and I'm happy to help or at least point you in the right direction if I can't help. So thanks again, and we'll see you soon.